Alright, good people. Welcome to one of the first of many videos for One Trade Away. I want to go over, just in general, how I swing stocks. And this is a very straightforward, no frills type of situation, right? And we want to always think about that when we're going into the market. We want things to make sense. We want them to be easy. There shouldn't be any in-depth mathematical formulas that you're trying to put together, and you're looking at so many different indicators from MACD and RSI and all this stuff. It gets inundating, right? And then you end up missing a trade because trading is about being timely. So let's hop over and let's take a look at the chart. And I'm actually doing this live in the middle of the trading day. We're about to walk in a power hour, but I want to go ahead and grab some stuff. As you see, I've got just a four banger up. I'm using TradingView. The first thing I always mention to people is you got to start off with having your charts right when it comes to swinging or trading in general, right? Because where I'm headed with this conversation is, in order to be a successful swing trader, you want to understand day trading, and I'll make that make sense as we continue throughout the video. But you got to have your chart set up right. So what I mean by that is on any of these charts, you're going to see I've got my gray line here is my VWAP, right? So I've got VWAP there, and I've mentioned this in chat a few times. My green up here is my 8 EMA, and I'm coming down and I'm on this this bear 500 here, the SPXX. This purple line for me is my 21 EMA, and I'm using EMAs, not SMAs, for my 8, my 21, my 55. I've got this concept from AB, back tested it, and I like it. Originally, I was using the 10, the 20, and the 50 SMAs, but the EMAs are hug the price action a little bit tighter, and I actually like that from an intraday perspective, right? So 8, 21, 55. And then I use this yellow is my 200 MA, so just a standard moving average, right? All those are inside this MA ribbon, which is just one of the features or indicators that you can add from TradingView. And as you see here, it lists out the 8, the 21, the 55, and then my 200. Right, so that's what I rock with on my charts, along with VWAP. And as you see, I've tried a few different things, but what I've come down with is what works best for me is having those indicators, having VWAP here, and then I'm always looking left, and I'm making sure I've got support and resistance lines. That's why on this Revlon situation that just happened today, I had to look left and get some support and resistance, and these were already on my chart from a previous trade 1 or 2 weeks ago. And that's always good. This Canadian solar down here, same situation. I've looked left and I've got levels, so I'm watching this as it moves up. And that's going to be the same for any chart that you see I'm in. There are levels, my same EMAs, SMAs, VWAP, and then some additional dotted indicators. These are simply levels that are diagonal normally, right? So if there's some type of trend that I'm watching, I've got a diagonal indicator. So you've got to make sure your day, your intraday is set up properly when it comes to trading, and it becomes vital for your swing method, for your multi-day, right? So for instance, on this Revlon, I watched it break through previous, retrace back up, halt on the way down. People are covering, so it's going back up. I'm always watching around that 50% retracement, and then boom, I'm seeing it come up here to try to test right here at VWAP, and then you've got your 55 on top at this point. I get a little wick at the top here, and then boom, it's coming back down to rest and support of the 8 and the 21, right? So based on what I'm seeing right here, one or two things are going to happen. It's going to get bid back up off this support, or it's going to start to fail. You'll get another wick at the top, and then it'll fail on the way back down, right? And then we may see 628s get retested. We may see day lows get retested. And I'll add another right here at this wick. Boom. We may see those lows get retested. So those are the things you want to watch for in an intraday trade, right? And we would decide if I want to go long, I may want to long this for a VWAP touch. I may want to short this with very minimal risk right here to come back and retest lows, or come back and retest 628s, right? So, or come back and retest where these wicks that show some type of supply where people, or excuse me, demand where people want to buy this up and it kept running back up. So how you build your edge, different conversation, different video, but just giving you a live example of the things I'm looking for when I'm trading. Now, getting to the meat and potatoes of this conversation, and I'll hop over, let's say on this chart, we've got Shop, Carvana, Spot, and Amazon. Let's take Carvana, for instance. When we talk about swinging, you're simply applying the same concepts, but you're zooming out, right? So on the swing setup, instead of looking at this on a 2-minute chart, I'm going to immediately just go to my 1 day. And I'm going to take a look at this on a 1 day chart, right? Same concepts. I've got my 8, my 21, my 55, and my 200, right? So now I'm looking at this saying, okay, Carvana had a great move up, right? Going, it broke these highs here, going into earnings, boom, big volume, and then boom, it started to come back up. It retested these high wicks here, came above it, started wicking at the top. This also, and I've said this to a few of you a couple of times, this moment also is very close to when SPY started touching its 200 MA, or getting close to its 200 MA on the daily, right? So you're watching that daily action juxtaposed to SPY at all times. But you've got this situation going on, and you see it wicks at the top. We're watching for a drop. So we're watching to see if this is going to start to curl over, which it did, and it curled back over to retest. And we're going to zoom in just a little bit so we can see just a little bit more. You're going to see that it retested, broke the 8, came down to the 21 and 55. Boom. And then now it's back here below this line that I had drawn, right? So the next question is, will it break below the 34.74s, right? Will it break these wicks at the 32.28s, right? And if I look here, I've got a line here and a line here. So guess what? I may want to make a horizontal line just like that. So now, if I wanted to short this, I may want to short this on the way down, swing short, right? To give me a 32.40s, 32.55 touch with a risk right here, maybe to the top of this wick, the 37.25s, right? So I'm at 35.83s right now. So I want to swing down for $3 with a $2 risk, right? So I'm risking $2 for a $3 reward. That's a 2 to 3 risk reward, right? That's not bad. It's not terrible, but I like a little bit more on my risk reward. But that's how we would set that up, right? And we can just come out of this. We can grab Spotify right here. Same situation. Let's look at it on a 1 day. Very similar. Came up, broke down. Everything's kind of breaking back through. The question is, will it go back to test this channel, right? Are we going to get some 102s, which is about a $7 drop? Or will we see it retest the latest or closest EMA that we've got, which is the 55 right here at the 113? So $4 from the 113 or $7 from the bottom. The question is, where do I feel like this is going to go? The first thing I'm probably going to do is go look at SPY and see where SPY is to make a decision on whether or not I feel like Spotify can rebound. Earnings happened about a month ago, so a little less than a month ago. So there's no earnings coming up. So tech as a whole would need to move, or SPY's going to need to move, or there's going to have to be some type of important news that's related to Spotify for it to get a move back up. But if the market continues to go down, more than likely Spotify is going to come back to retest these 403 levels, right? So I would risk this to the downside, maybe to the top of this wick, which was day highs, right? So 111s, I'm at the 109, so I risk $2, right? 111, let's say 111.60s would be my risk, right? But my reward is going to be the 103.60s, right? So 111.60s risk, so that's a $2 risk up. But what I like to do is capture a $6 risk on the way down. That's a 2 risk to 6 reward, or a 1 to 3. That's the type of risk reward I'm looking for. That's the type of risk reward that this stock would allow me to have if I decided, and I'm gonna just set an alert for the 103.60s. Excuse me, 111.60s. I'm gonna set an alert for the 103.60s as well. If I can get to the 103.60s, that's close enough. So that's the type of range I'm looking for if I want to swing this short, right? If I was swinging it long, I probably would cut my risk to lower days for today, which is a bit around $2, risking back up to get to the 113s. So that's that's the edge that I'm looking to carry based on what my beliefs are and based on where this particular equity or this particular stock is in relation to its 821.55 EMA and its 200. Let's see if we can find something that looks a little bit different. Let's go outside of tech and let's go to let's come back over here. Let's take this. Let's go to Walmart, for instance. All right, let's take that up. 1 day. We've made some trades on this in the past. We've captured some good swing leaps on this. Now, note, this came up big wicks. Once again, I'm on the daily. You've got big wicks here right above the 200 MA. 200 is one of the most important indicators on the daily. Big wicks, normally that's problems, right? This means there's a lot of supply that came out. People were selling, but not a lot of people continued to buy it up. So you end up with a lot of supply down here. If the wick was at the bottom, like over here, that was demand. It dropped down, people bought it up because they demanded that price point down below. Here, there was more supply than there was demand, so you end up with a big wick at the top. So you got all this supply here. So this zone will be important, right? So I would immediately, let me set an alert back here. That's going to be an immediate area of interest, these 139 to 143s, right? But boom, broke back down below. And guess what? Look at what we've got here. We've got almost like a triple top. Boom, boom, boom. So I would probably say, let me get, and based on what I'm seeing, I'm probably going to draw a line that's here, right? So I would expect some bouncing action around the 133.50. So it's got about $1 to go before it gets to that. So what I would do is set an alert here, right? I'm going to set an alert down here by these 133.50s that if I see Walmart now trading in this area and SPY is starting to go back up, well, guess what? Then I'm going to long this, right? I'm going to swing this long with a very tight risk, maybe down to like the 133.19s, right? This EMA will probably, the 21 will probably move back up by then. But I'm going to swing this right below this area if it can hold that tightly. And I'm going to look possibly for a retest into these 138s, 139 zone, right? It's literally just that simple. I want to have the best risk reward if I'm going long or if I'm going short. And to transpose this to options, same thing as if I'm buying calls, right? I'm going long, I'm buying calls. I want the best risk reward for that because I want to know that if it does break down below these 133.19s into the 132.88s, I may want to shave off half. I may want to shave off 3/4, right? I may want to stagger my stops based on the levels that it hits. That way I don't prematurely take everything off the table, right? That's not managing my risk properly. So I want to do that, right? But my goal here would have the best edge. So I would wait on this one for a retest, and then let's see if I can get back to the 138s, right? With a very small minimum risk. So in short, or in conclusion rather, I'm always looking first at intraday perspective, right? I've got my intraday setup. Secondly, I'm going to look at my daily setup just like I look at my intraday. It's simply over a longer period of time, which means you got to have more patience to allow the trade to work in your favor. We don't want to FOMO. We don't want to rush into a trade because guess what? There are thousands of trades every day that we could take. So I hope this helps someone. I hope this answers your question that you asked me about swings, KB. Anybody else who's watching, let me know if this is valuable to you. If there's anything additional we want to go over and anything else that we want to kind of dive deep into. And just remember, like I always, I'm going to start saying, we're only one trade away from from wherever you want to be. I'll holler at y'all later, folks. Peace.